Hello, wonderful traders. Dadas here, speaking to you from the Dadas Trading Room on the Discord platform, to which you are sincerely invited. I would like to see as many people there as possible and as many active people, not only passive people. So please join us, and because things are starting to move. So the more of you, the better. Today, another episode of the daily recap. So as usual, my daily recap is about the DAX 30 market. So it's the index of the 30 largest companies in Germany. I like this index because it's pretty volatile. The spread is relatively low. During normal times, the spread is very low, and it's stable. It's always the same during the whole day. During these recent few weeks of increased volatility, the spreads are getting higher than usual, but even today, the spread is most of the times 3 pips. Well, it's a very nice spread in relatively to the movements and to the volatility of the market. So if we look at the market today, basically it's going down. It's been going down all the time. Of course, it had the moments of retrace, but generally it was going down. And during the American session, it wasn't so clear whether it would be going back up or not. It was more or less consolidating. We could also see some kind of a reversed head and shoulders formation right there that suggested that the market might go around and go up, but it still kept on consolidating. It didn't do much. But it's generally right there. If we look at those waves were creating a bullish pattern because the dips were higher. Every dip was higher. So then a nice trend started developing right there. So there was an opportunity to go long. But then suddenly the market changed and the price dropped back down. So basically, of course, we can see that afterwards, but we could have just clicked right there, right? And we can see that basically throughout this part of the day, the market was respecting this level as some kind of support resistance level, which means that this was actually a very strong supply zone, right? Or supply area, and somebody had some interest there. So somebody didn't get filled. Perhaps right there on this move, somebody didn't get filled, and they had to go back. And that's why this move right here, because probably they got filled right there, and then this move happened. Pretty rapid move, right? Rapid move. So when I started trading, the market was right here in this area today, and I was more concentrated again on this chart, so on the DSWS. Of course, during the time when we couldn't see. Now I'm gonna have during the time when we couldn't see what would happen next, right? So if we couldn't see this, right? Oh, come on. If we couldn't see this, we only could see this, we might be inclined to think that the market might turn around, and because we get these bullish candles right here, so pretty big reversal. However, it also wasn't very clear to me, because when I first looked at it, I looked at this level and I thought that, okay, this level is cool, but in order for this to be a breakout, then I need to do something like this, right? I need to measure it out. Now it's not gonna. Shit. Let's straighten it out. Still not straight. Yeah, like this. So then I thought that, in order for this to be, come on, shit, again. Okay, now, so I thought about it like this. In order for this to be, a breakout, then it should break out from this level. So basically, this is the breakout. And I failed, and I actually failed because I took a trade right there, which was a pretty stupid thing to do, considering that generally the day was bearish, right? The day was bearish all the time, practically, almost from the very beginning of the day. So basically, this was like wishful thinking. Like I was trying to do this thing here. I was trying to figure out that we have this consolidation right there, more or less, right? So yeah, right there, and this is the breakout. And I thought, okay, if this could be the breakout, then there's a possibility for a retest right there. Well, maybe, but frankly speaking, this was too weak. It was too weak, and I basically shouldn't think about it like this. Anyway, you see that the market started moving down, and I had my stop loss pretty wide, but I figured out that there's no sense to wait for this kind of a stop loss, so I just closed it. And then I did my regular thing. I mean, at this moment I already figured out that the market should be going down, because one of the clues was the daily range. The daily range at that moment was about to this low right here. The daily range was 300 and a little bit over 300 pips. So that would have been pretty unusual. Well, if the day had ended at only 300 pips and it was a very bullish day, bearish. Sorry, it was a very bearish day. So I figured out that they should be going for at least 200 more pips. Yeah, it's kind of a norm, considering the way the market was behaving. So I figured out I would get in at 1.5 pips lots in order to recover my loss, right? And this was a frustrating moment, because the price started moving exactly when I entered short. The price started going back in the other direction. So such things are really frustrating for me, because I've so many times I've lost money entering like this, and when the market never came back, right? I mean, at least not in a reasonable amount of pips. And I still wonder at myself, why am I always doing this stupid mistake? Like there's something sitting inside of me that I simply can't eliminate. And I don't know how to eliminate that. I mean, it would have been much more. It would have been like 100 times better if I simply did something like this, right? And I simply waited out the whole thing, or perhaps, well, basically, the way I would have to measure it, knowing what I know right now, would have to be like this. Oh, come on. Again. Yeah, like this. Would have to be like this. And you see that I had lots of opportunities to get in short. And this was also a very good opportunity to get in short instead of getting in long. Yeah. And also, yeah, there were other opportunities to get in short on at a good price. So even this entry was a little bit was well at least it wasn't at a good price, right? It required me to take more risk, more initial risk, and then to trail my risk, lower my risk when the price was already moving down. And you know, right there again, this is a whole set of psychological problems that cause me to take the profit as quickly as I get as I recover from my losses, with maybe a little bit of profit if possible, right? And exactly that's what happened here. But again, because of this type of configuration, this type of situation, I simply am unable to wait out the trade until my take profit. Because you see, this take profit right there that I put right there in this place, it got hit. It got hit. So all I had to do was just patiently wait out until the take profit would have been hit, and then there's the difference between 22 pips and 120 pips, right? There's a pretty big difference, right? It's like 5-6 times almost, right? Almost 6 times the profit. Yeah. So yeah. So this is the kind of a problem that I'm facing now. What happened here? Again, the same thing here. The only difference that I entered at a minimum lot, 0.1. But the same thing. I was trying to do this. I was trying to get in on, breakout, retest, and the at least in theory, the price should have been going up, right? Well, it did. It actually did go up, right? It actually did go up. Now, had I trailed in my regular fashion, then I should have been taken out on the R3 level, right, at a profit. But I had an opportunity right there. I had a small opportunity right there. I had 2 more opportunities right there. All of these opportunities were where I could have closed at profit, but I didn't, because I had this idea that the price should go up at least to R5, because the level is pretty nice, sort of like in the middle of a consolidation. It's like a nice previous support resistance level, right? So a support level that became resistance. So everything looked like but it didn't work. I waited until I got my stop loss. Yeah, and also I got my stop loss, and then of course the same thing triggered. The same thing. The idea to quickly recover. So I entered. like I say, I'm generally going forward. I'm generally making profits, right? But those profits are little. They should be bigger. They should be much bigger. You see, because right here I managed to recover, and again I closed because I managed to recover, but the market did hit my take profit, right? Again, the market did hit my take profit. Whether or not the trade was good, well, it wasn't good. It wasn't good at all because what I should have been trading, I should have been trading this. So in other words, I should have been simply measuring this out like this, right? And yeah, that's a good measurement right there. Measuring this out like this, and I should have been trading short somewhere in this area. Somewhere in this area, I should have been trading short and getting out. Well, not necessarily where I put my take profit, but my take profit should have been right there on the S5 line, right? And that's like that's 50 pips. That's a pretty hefty, profit. You know, not 66 loss, but 50 pips in profit. Okay, so yeah, that's another one of those stupid things. Now, this one I did in a different fashion. This one I did right here, looking at the signals and the price action going up, and I switched to my Renko charts. I switched over to my Renko charts, and this is this one. And I plotted it out, something like this. And then right there, when the price was going up, I hit my button. It got triggered. Well, the price went down a bit and then came back up. And my expert advisor, so Trade DTR, Data's Trade Ruler, is trailed the stop at 9.9 pips, and the spread right there was very, very tight, very nice, and I didn't get much slippage. You see, I just got 0.1 pip slippage. So this was a nice one, even though we know the market did continue up, right? It did continue and it went up further. And again, I got an idea because the market was, kind of going up. So I got an idea. I thought, okay, let's do it again, right? So I measured it up like this, and you can see that I entered in here a little bit, well. The current candle was kinda more bullish than, the current price action, but then it turned around and still retested. My stop loss initially was a bit wider, not there, but right there, below that line, because I simply did that, right? So, yeah. And then I trailed my stop loss right there, but when the price was already moving up, but because of this bad entry, I simply got out of here manually, because I again thought that at this level they might be resisting and coming back down. I don't want to risk anymore, so yeah. So I got out. 0.5 lot, still a relatively standard trade that I used to take, right? Anyways, the market did continue and did go up. And with the stop loss at this level, it would have taken out my take profits, right? So the initial thinking, or initial measurement would have been good for my take profit. Okay, so that's about all I did. So you see what the market did right now. We are practically at the end of the day. Let's take a look right now how we could have played this out in a different way, or let's say in a more reasonable way, because actually it was all very simple. I mean, when I was looking at the market right there, well, I could have done at least something like this, right? I mean, this is a bearish candle, there's a bearish signal, right? So I could have done something like this, and yeah, and I'm in a bearish trend. So either I'm looking for a bearish trade because I was right there before this move, right? So I do this, I should do this, right? Now that's all that's needed for a good short trade, right? I mean, the trend is showing a bearish trend rather than a bullish trend, right? All it takes is just this, here is my ellipsis. The ellipsis is working as resistance at this point, right? So again, it's better to go short than to go long. So this was a complete foggy brain, completely morning foggy brain. I don't drink coffee, so yeah. It was some foggy thinking, foggy wishful thinking. That's also why this short worked out, because it worked out because the trend was short and the trend was down and not up. Yeah. Now, again, this one, well, like I said before, this one was basically based on this thinking that the price bounced off of here and it should bounce off. And it did. I mean, it actually did. It bounced off, right? The price actually did bounce off and did start going up. But the problem is that I failed to take the profit right there, right? That's the only problem with this trade. Except that the entry also wasn't that good, because the entry should have been taken from this. See? If the entry had been taken from this level, from after this signal, somewhere right there, then there would have been a perfect long, right? A perfect long, let's say, for 60 pips, almost 60 pips, right? That's the potential. That was the potential right there. Almost 60 pips. Yeah. Now, when the price did this thing, so my ellipsis has been broken right there, right? So then we do this, right? I mean, yeah, the market didn't actually reach the take profit. I mean, it missed take profit just by a little cinch, but it came back right there. Right there, it took the profit, the take profit level, but that was late, just a few minutes ago, right? Now, yeah, but anyways, I mean, this would have been a perfectly viable trade using some trailing techniques, right? So as not to lose, right? And definitely the last moment to trail would have been after the bounce up and this candle, this engulfing candle, bullish engulfing. I mean, yeah, that means the market is coming back up. So yeah, you got to be really careful and secure your profit, right? So that's, I mean, trading the way the way I trade right here, it's impossible to take this move, practically impossible to take this move because the move is very quick, very rapid, right? But also that could have been some information, because you see, basically this rapid move is like a mirror move to this rapid move down there, right? The move going down. So yeah, that should be telling us something too. Anyways, here's another situation where the ellipsis is broken. So basically like this, but the market is not reaching the take profit right now. So that's more information. Anyways, this short would have still worked out, this short still would have worked out for some pips, right? But always have to be trailing, right? Always have to be trailing, always have to be careful. And now there was another run upwards, and this little bullish rally was a pretty slow rally with pullbacks, but it started developing very nicely from here. So basically from this candle, but again we cannot enter, we just can't enter at this, it's impossible. We might be able to enter at this, right? This would have been a good one. But again, I mean, the market missed the take profit level by a cinch. But anyways, that would have been good enough, right? Even to get out after this candle, it's still 64 something pips, right? So that's still a good situation right there. Yeah. Now, could we have taken the short? Nope. That's practically almost impossible because the price ran away. Even though, because we have to click it like this and we have to count on a retest, but there was no retest, so the price just went away. So that would have been practically impossible to take from this perspective. Yeah. To take this bounce, we would have to be thinking all the time like this, and all the time playing short from somewhere in this area, and not thinking about anything else, not thinking about going up with the price, but just going down with the price from these levels. Okay, and that's practically, yeah, that's how we do it, right? That's how we're supposed to do it. That's the method, but somehow I just can't get my stuff together recently. A little bit of old age, perhaps. Anyways, I believe in you. So I can show you the method. I can give you the method. You can purchase the method from me. I'll teach you how to do it, and I believe that you will be better than me, and you definitely will be better than me, and you can be better than me because you are young and I'm old, and that's perhaps the problem. Anyways, yeah, old and stubborn. Okay, so so like I said, on the Discord server, I practically stream live every day, so you can see my trades every day. So I would like you to participate. I would like you to be good at my method. I would like you to tell me, Dada, stop doing that because your method is good and you're not doing your method right. You're just wishing and trying to figure out something that's basically not your method. Okay, so please join us at our Discord, at my Discord server. Also, I encourage you to become my Patreon on patreon.com/Dadas Trading System Workshop, because for as little as $17 per month, you can become my patron, and you can get many benefits from that fact. Like you will be granted access to VIP channels where I post, for example, videos like the weekly recap, right? I do something like that, and those videos are usually long, 2, 3, even one is 4 hour long. Then I'm showing there exactly what should be done, right? Or what should have been done ideally, right? During the whole week. And also you get many more benefits, like you can order videos from me, you can get some help from me, and you can also accumulate your money. So all the money that you pay in accumulates, and then you can get my system for free. I mean, if you accumulate enough money for 3 hours of my Dadas Trading System Workshop, you will get this simplified version of the DSWS. So that's this system here, right here, which includes DSWS like this, right? And the expert advisor that manages this DSWS, and also if you accumulate enough money for 6 hours of my Dadas Trading System Workshop, you'll then get this more complex system, right? Which is based on, I call it Dadas universes. These ellipses are universes, right? And of course you can see how the price kind of moves inside those universes, right? Which helps us to visualize quickly what's happening, right, during the day. And this one is also associated with trading on the Renko charts, right? Okay, so those are the benefits you might get if you, of course, become my patron, which I sincerely invite you to do. Also, please like this YouTube channel, subscribe if you already haven't. Don't forget to hit the bell icon so that you will be notified about my videos all the time. And yeah, I mean, if you don't like my videos, then be sure to press the thumbs down button twice, but like really twice, yeah, so you show me you don't like me. But if you do like me, then please just one solid like. That's all I require from you. Thank you very much. Like I said, tomorrow I'll be recording the weekly recap, so that's only for patrons. And starting Monday next week, we're gonna continue with the daily trading and daily recaps. Thanks a lot for now. Have a nice weekend. See you next time. Bye.